Good day, Uptown Accounting Group, Lamar Jones, back at you with another video. So today we're going to talk about the biggest company in Africa based off market cap. And the name of this company is Naspers. And let's talk about what they do. And so this is a quick little overview that they provided with their financial statements. Their most recent financial statements was from March to September of 2025. So this information is a little old as this is 2026, but we'll still be able to get some understanding from it. So first thing here to note, Naspers is building the #1 lifestyle e-commerce company in Europe, India, and Latin America. And so they're focused on those regions as a lifestyle e-commerce company, unlocking an AI first world for their 2 billion customers. It looks like in Latin America, they are making 10 to 15 billion with a potential of 50. In Europe, they're making 15 to 20 billion with a potential of 50. In India, they're making 6 to 11 billion with a potential of 50. And in China, they're also in China. It looks like they're making 169 billion. And so through a company named Tencent. And so it looked like they own WeChat. So this African company is in Latin America, Europe, India, and China as items of note. And then here in Latin America, some of the things that they provide is iFood delivery. So this is like a DoorDash. They also have groceries. So they give out groceries, shoppers, stuff like that. Uber, financial services. So a host of different services are provided on their platform, technology platform. So we kind of got a gist of what they do and what they provide. And so let's go into their financial statements. This is the CEO here. I get the financial statements from here, so you can self-serve and get that information. Moving on to the financial statements, let's check out the table of contents to see where the financial statements are. All right. Page 11 is the financial statements. So let's talk about the financial statements. So we can look at it from this column here that's bolded. And so remember, it's a 6-month time period. So from March to September of 2025, they made 4.1 billion. This number is in millions. And so that makes this number 4.1 billion. Out of the 4.1 billion, remember, revenue minus expenses equal net income. So for here, we have the expenses of 2.2 billion and another expense of 1.7 billion. The 2.2 billion consists of like a cost of goods sold. And so all of the services that they provide, it comes with a cost to prepare it or produce it. And this is that cost, this 2.2 billion. In addition to that, they have 1.6 billion or 1.7 billion of selling, general, and admin. And so that's another, this is like salaries or just general expenses. So out of this 4.1 in revenue, you have to consider the expenses, which in this case adds up to, let's call it 3.9. And so after that, we have operating profit. We subtract the revenue from these expenses. We get an operating profit of 178 million. So out of the 4.1 billion that was made by Naspers, 178 million was retained. 3.9 billion went out in the form of expenses. And so that is just a quick net income from looking at it from an operating profit perspective. Now we're going to move forward to the balance sheet. And remember, balance sheet asset minus liabilities equal equity. And so here we have a total asset line of 80. So I'm gonna have to make this a little smaller just so you can see it. See the full picture. So 80 billion is total assets, and it's broken into two sections: current assets, non-current assets. Non-current assets, the biggest portion of their assets, And out of the non-current assets, it looks like 44 billion is reserved for investments in associates. And so this is a very interesting number where they're investing in associates. And they have a note here for us to check it out. And we may have to go do that. And so we'll check out note 13, and we may check out another note as well. And then we have, so their biggest asset right now consists of this investment in associates. And so let's check that out after we look at liabilities. Liabilities, they have it looks like they have current liabilities and they have non-current. So this 17.5 billion is their non-current liabilities, current liabilities of 7 billion. And they have their biggest liability consists of interest bearing liabilities, which could be like a loan. So it could be business loans is their biggest liability, leaving them with an equity of 55, 56 billion. So that's pretty good to have assets of, matter of fact, that's great to have assets of 80 billion and only have liabilities of, just call it 25 billion, and to have equity left over of 55, 56 billion. That's very impressive. So now let's check out those notes real quick. We're going to check out note 13 and let's check out note 8 for the revenue. And so, in short, just to show you how notes work, remember the revenue is 4.1 billion. The notes go into deeper detail. We go into the notes section. We see that 4.1 billion. We can see here that it's broken into products. So it gives us a different slice of the information so we could digest it. And we can see that this is broken into by the different products. And so their version of DoorDash, this iFood, made 736 million in this 6-month time period. Their definition, their like version of PayPal made 751 million. And so going down that same 4.2, if we look at it from a geographical standpoint, we can see that Africa, they made 500 million. And out of that 500 million, all of it came from South Africa. So this, even though it's a South African company, they didn't make money in any other country in Africa. They actually have a zero for the rest of Africa. However, in Asia, they made 391 million, 360 of that coming from India. In Europe, they made 1.9 billion, with 1.4 billion of that coming from Eastern Europe. And in Latin America, they made 1.2 billion, with 1 billion of that coming from Brazil. And so it looks like Brazil is their biggest country that they make money from. Eastern Europe is like a grouping of a few different countries, but the one single country that they're making the most money from is Brazil. And so now let's go to note 13 because they had a pretty good investment in associates, which is not something you fairly see. Not something you see often. Not something you see often at all. And so here's we can scroll down to this investments in associates. And I look like they're gonna make you read. Okay, it's not too much to read, but they're not really telling. They're not really telling what it is. I'm not seeing it straight away, but they're really prioritizing their investment in associates. So I would like to get more information on that, but it doesn't look like anything is here. The group assesses whether so we'll tackle that later. But essentially, very good balance sheet. Net income is pretty strong. They do have a fair amount of expenses, and so they're not really retaining all of their revenue as of yet, but things could change. And so keep Naspers in mind as they're growing and they're expecting to grow even more. They're expecting increases in revenue, so it's something to check out on the global market. If you have any questions, let me know below. If there's something you want to talk about, you could DM me or you could just put it in the comments. Until next time, like, follow, subscribe. Deuces.